Hey guys, welcome back on the channel. In this video, we are going to look at the potential strategy to profit when the markets crash. And that's going to be using Bitcoin, arguably the strongest currency ever created. And I'm going to show you how to do that even as a complete beginner. So this is Bitcoin's chart for the past 7 days here on CoinGecko. As you can see, there was this massive dip. Well, not massive. We experienced bigger Bitcoin price fluctuations in the past, but it still was substantial. We went down from 120k down to overall 109k, and now we're seeing a comeback from Bitcoin. This is only in the past week. This is due to the recent flash crash of the market. A lot of people were liquidated. I believe it was $19 billion were wiped out in liquidations due to leverage. If you do what I'm about to show you in this video, liquidations will not affect you. That will only be something people who play with leverage need to worry about. And you can play with leverage by trading, by borrowing and lending, etc. But using liquidity pools, it's not going to be something that you play with leverage. Although there are protocols that allow you to borrow money to increase your deposit in a liquidity pool, we are not going to do that. So this is Bitcoin's chart for the past 7 days, right? So this is Bitcoin's chart for the past month. And you notice that as soon as we touched this previous support level that was established in the last week of September, the price immediately bounced back up. So that gives us some reassurance. It doesn't mean that in the future this support level cannot be lost. Can definitely be lost. Bitcoin can retrace even further than 110k, but this is the first support level that we see that could handle this market crash. If we go ahead and zoom further out to watch Bitcoin's chart for the past 3 months, we see once again this support level coming into play here in the beginning of September, ending of August, and it did also held quite good, bouncing back up then the price up to 117k, further drawdown to this already established support, and again it bounced back up to an all-time high. So looking at past periods, we see that this support level keeps on holding. What happened then for the past year? So this support level no longer holds. If we go back to earlier this year, in the beginning of April, we see that actually the support here is at around $80k. And the reason why we are looking at support levels is because these will be crucial for us to set our downside ranges. The strategy essentially is looking at support levels where Bitcoin's price does hold and come back so that we can profit. We can set up a range that even in the case of the market going down, we know that at least with some security to it, the market previously responded well to it. So we are betting on that. And understand that whenever we invest in something, be it crypto, be it something else, maybe in the real world, you go on and invest in your own business, it's always going to be a bet. We are betting that it will pay out. So when I use the term bet here, it's not necessarily associated with something bad, all right? So we could keep on going and doing this and zooming out and see for past support levels, but I believe you get the idea. And we already see some substantial support here. I think 75, 80k, it's a very solid range for a drawdown. Maybe Bitcoin can retrace 50% and go down to at around $60,000. Can happen, but if that's the case, you just need to hold and wait for it to bounce back up and you're back in the game. Okay, so the next step is going here on the X screener and find wrapped Bitcoin pools that allow us to deposit Bitcoin, or at least have the exposure to Bitcoin on EVM and Solana blockchains where there is a lot of volume and we can profit when the Bitcoin price goes down, because there's still going to be a lot of volume being made whenever price goes down and hopefully goes back up. Now we could go into some of these pools, wrap Bitcoin paired with Solana. As you can see, they have quite a lot of volume. The volume is higher than the liquidity, much higher in all of these cases, which is very, very good for what we're looking for. We want to profit. Volume is a key factor in order to earn us fees. That's what we are looking for. But for the sake of explaining this, and if you're a complete beginner, it's better to go with a Bitcoin stablecoin pair. This means that you'll be depositing in a pool that has Bitcoin and dollars. And usually these pools that have Bitcoin paired with the stablecoin also will be the best performing ones, because think about it. People take profits from crypto in the shape of stablecoins, and they also most likely go into crypto depositing a stablecoin, a fiat currency, a dollars, euros, whatever, you name it, and then buying in Bitcoin with that fiat currency. Most of the volume in crypto markets is going through Bitcoin and stablecoin liquidity pairs. On Solana, USDC tends to be a good one. I do think USDC it's the most used stablecoin on the Solana ecosystem, so you might want to look at a wrapped Bitcoin or WBTC USDC liquidity pool, or even a CBBTC USDC liquidity pool. The difference is that CBBTC is Bitcoin issued and backed by Coinbase, but both are among the most popular tokenized versions of Bitcoin that you can use in DeFi, which is necessarily outside of the Bitcoin's native network. So Bitcoin maxis, they won't like this for sure. They will say it's not real Bitcoin, but there's no DeFi in Bitcoin's native chain. So if you want to go and deposit into liquidity pools, you necessarily need to go out of Bitcoin's network and just take advantage of Ethereum blockchains or Solana. So the current price of Bitcoin is at around 115K, and we see here the previous support level that we talked about here at around 108, 110K. So from current price, that means that we are looking at something that it's around 5-6%. So that means that if we are depositing into a liquidity pool with a position like so, we will earn fees when Bitcoin price goes within our range. So the big block here, the red block here, is our range, 5% below current price. If you want to be more conservative, you gotta go with a deeper range, a lower downside on your range. So it could be something like this that goes down even further to 10%. Maybe if we want to make sure that if price drops to previous support levels like this one, we go down to 9%, maybe 10% if you like round numbers. If you want to go further below that and really bank when the markets really go down to 90%, this would be a substantial crash for Bitcoin. 20% down, although I'm telling you this as someone who experienced past Bitcoin cycles, 20% is nothing. We can have this type of events happening multiple times in the middle of a bull run. It doesn't mean that the bull run is over, okay? But the reason why this is very conservative is that you will miss out also if Bitcoin price does go up. So if Bitcoin from here starts to go like this, you will miss out because your range is below current market price. So that's the downside of doing this. But of course, if you want to experience the best of both worlds, you can also make sure that you deploy a price. Let's say you are very bullish at the same time about Bitcoin's future. So let's say, okay, I want to have my range in between 140K, which would be definitely all-time high, and something at around 90K, maybe even go back to this previous support here that did held quite nicely from the 6th of March up to late April. You can see the price of Bitcoin here traded in between 80 and 90K for a couple of months. So this is a strong support level, and overall we would have to set a range for this type of liquidity pool position at around 43% overall. This would allow you to generate yield, either the price of Bitcoin goes up or down. That's why I call this type of strategies banking on Bitcoin. If you are very conservative and you're not so much bullish or certain that Bitcoin price can go up to 150, 140K, or even break up all-time high, which is at around 125K, you could do as I showed you in the beginning and only set up a downside range for your LP position. So you could have your LP's position to be on an overall 30% range below the current market price, or whatever the price is when you're watching the video. You could look for support levels. You see here on the Bitcoin chart when the price is chopping sideways, that is considered support. The longer it is, in theory, the best or the strongest it will hold. So it gives people more reassurance that the price is going to hold strong even in the case of falling down to this support level. But of course, since we do not have a crystal ball, if you keep on stacking these lower support levels, you will be safer, because as we see Bitcoin's price going down and breaking support levels, the likelihood of hitting the next support and holding starts to just be bigger and bigger each time, at least in theory, right? So I call this banking on Bitcoin, and you can use multiple DEXs. I'll show you later on in the video a couple of ones you can use on multiple blockchains, but as long as Bitcoin price drops below your range, you generate fees, and I call that banking on Bitcoin. You can do whatever you want with those fees. You can claim at any point in time. You can deposit them back into your position at any point in time. You can also withdraw all of your liquidity at any point in time. And also one very important thing, if you are going to deposit below the current market price, you will deposit in dollars. Essentially, the setup that we're looking here will allow you to buy the dip, literally, because let's say you deposited $1,000 or 10,000 here. When Bitcoin price starts to go down, you see that your LP position will start to buy in Bitcoin. The further down it goes, the more Bitcoin you buy. So you have to be comfortable with that. Most people will panic when they see that because they will have very tight ranges. And whenever the price meets your bottom range, now you are holding 100% of Bitcoin. So if you deposit $100,000 or 10,000 or whatever amount you want to deposit, now you will not have dollars, but instead 100% Bitcoin. And the same is true when the price goes up. You will start to see your Bitcoin getting sold for the stablecoin of your liquidity pair. In this case, it would be USDC. So to sum things up, I think this is a very conservative play for people who are not necessarily bullish on Bitcoin, but it will allow you to profit when this type of market incidents do happen. And potentially even in the upcoming bear market, I don't know where the floor will be in the upcoming bear market. Actually, I don't even know if this will be all-time high before the next bear market. Potentially Bitcoin can go even higher from here on, and if that's the case, your position will not generate any sort of yield. What you could do instead as prices go up is that you would then set up new ranges, so you can withdraw this liquidity and create new ranges. Maybe Bitcoin goes to 150, so then you would set up a range something like this. Let's go with 160 actually, since we're at it. So you would set up your upside range here and then your downside range at around here, 78, 80k, something like that. And imagine now Bitcoin price is above this, right? So you would still be conservative. So let's say Bitcoin price would be at around here, right? Let me delete this one. So in this case, it would be the same scenario, but looking at a different chart because Bitcoin price in the meanwhile went up and just shoot up from current price, right? So this would be still a very conservative approach, and it would protect you in the event of, let's say, the bear market starts and then Bitcoin price drops 50%, you would be generating fees in the meanwhile. You'll be earning Bitcoin and USDC. And you can come every day, every other day, instead of DCAing Bitcoin, you can deposit into this pool. You deposit with dollars because it's below Bitcoin's price. And whenever Bitcoin drops and goes into your range, you generate fees. And the more you deposit, the bigger your piece of the pie is because your share of the pool keeps increasing. That's how fees will be distributed. As you can see, the liquidity here in this pool is 185k. If you would be a holder of $18,500, then you own 10% of the pool, which means that all of the fees that the pool is generating, 10% of that are going straight up to you. And you can claim them whenever you want. You can withdraw your liquidity from your position whenever you want it's completely up to you. This works 24/7, 365 days a year, non-stop, on the weekends. That's the main difference between crypto and traditional finance. So now let's look at a couple of different exchanges you can use on-chain. I'm not talking about centralized exchanges, I'm talking about decentralized ones. So you can go here on Orca. Actually, Orca is the one where this liquidity pool is on. So if you want to provide liquidity on Solana, Orca is a good place to go. Going here on DeFi Llama, we can see the DEX's volume, on-chain volume for the past 24 hours. And there's going to be reputable DEXs here. So the biggest one is Uniswap. The second biggest one is PancakeSwap. This is according to volume. I sorted this out by volume, but they are among the biggest exchanges, on-chain exchanges for Ethereum and Ethereum layer 2s. If that is where you have your crypto on, you want to go with a couple of these ones. Maybe if you have your crypto on Coinbase, you can go also with Aerodrome that operates on Base blockchain. But even on Base, Uniswap has very profitable liquidity pools. The same thing with PancakeSwap. If you want to go on Solana, use Meteora or Orca. Orca here is on the 10th spot, but I prefer to yield farm on Orca than, for example, on Radium, just personal preference. So it pretty much depends, where do you have your holdings, or where do you plan to hold your tokens on chain. On Ethereum blockchains, go with Uniswap liquidity pools, go with PancakeSwap. If you are on Solana, go with Orca or Meteora. I did plenty of videos about how to use Orca, how to use PancakeSwap, how to use Uniswap. I will link those at the end of this video and also down below in the pinned comment, so you can go check it out. They are complete tutorials that show you, even as a complete beginner, how you can read everything on the screen with those exchanges, how you can set up ranges, deposit into given liquidity pools. If you have any questions, let me know in the comments. Potentially I can do a video about that, okay? But even if I don't, I'll get back to you. I'll try to help you out as much as possible. So guys, this is what I wanted to share with you. Even when prices go down, you can make money with crypto, with Bitcoin, which is the strongest cryptocurrency. But of course, I'm bullish on crypto, and I do think whatever the drawdown from Bitcoin's current price is, I think it will bounce back up. We are at a moment in time where we see institutions buying in Bitcoin every single day. BlackRock has been buying Bitcoin since the release of the Bitcoin ETFs. The same thing with Ethereum. There's already talks about ETFs going to happen also for Solana. We are on the verge of a new financial system, which is no longer centralized, guys. That's what I truly believe. That's why I'm making this video and showing you that even in the event of market crashes, you will not necessarily be affected. In this case, if you are in a liquidity pool, you only lose if you choose to sell. So guys, that's what I had for you with this one, banking on Bitcoin. Let me know if you have any questions. I'm going to wrap this one up. Thank you for watching. Take care. Keep exploring crypto, and I'll see you on the next one.